Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, January the 24th, 2025. Only 7 days left in the first week of the new year. Quite amazing. And how fast the time goes. Because, last webcast, we were looking for this rocket launch for the fifth wave for Bitcoin, question mark, exclamation mark. Well, it looks a little bit more like this. This rocket looks like this, okay? Zero signs of a top being in place. We have not broken below any warning levels whatsoever. But that tech rocket we had here has turned into this. It's most likely a ending diagonal. That remains our preferred wave count until proven otherwise. So we're going to go over trend lines. Lots of trend lines and lots of failures to break above these trend lines. It's a little sad story, I must admit, but it is what it is. And some people will say that, trend lines are not important. They're arbitrary. You can just draw a line between 2 points anyway. But I've shared this with you for Riot, for example. I think it's been bumping its head now 8 or 9 times in the same trend line. If that means trend lines are not important, then water can burn. Anyways, I think we are somewhere here in Bitcoin, somewhere here. I don't have signs that we've topped yet for this larger third wave. Still think we should go higher. And I've shared many professionals' opinion with you recently that are posted on X, at least people that I think are worth their salt in their technical analysis. And so we still are going to look higher. Well, without any further ado, let's go through the charts. And here you can clearly see the 106,000. Okay, Bitcoin has severe problems breaking over that level. I don't know exactly why. What's the magic about 106? Anybody who can help me explain, please do so. We're at 104,000, just right below it. Okay, so if we're going to zoom in, right, we have the breakout, so we have the breakout here. I should probably point it out here better, right? It's a breakout from the downtrend that we were in. We had the retest, and now we're stalling at 106. 106 was resistance here in December, okay, twice. It was resistance here 3 times, resistance here 4 times, resistance here 5 times. Resistance here, though exact close was above 106,000, 7. 8, 9 times now. Okay, 9 times. 1, 2, 3, 4, 5, 6, 7, 8. Sorry, 8 times. Oh boy. Well, we'll give the bears some credit where it's deserved. It clearly shows that if we do get seller's exhaustion, we'll see a serious breakout into that 120,000 zone. Okay, that's what we're looking for. Again, it still looks more like a continuation pattern is forming. This is what we can also make into a triangle on the shorter term. So we have this pattern going on. You see that? This pattern like this. And if we then see a close above 106,000, that can already target then this level, okay? 113,800. That's pretty much on a breakout that we're looking for. Okay, so 0 signs of a top in place. This is our wave count. We started off with a standard impulse pattern, a 1 2 1 2, and that is now morphing into a AB ABC type of pattern of a ending diagonal. And the first warning level, you know what? We should maybe raise it. Why not? We're not going to give this a lot of leeway. The first warning level, I would say, is now right about here, which is at about 101.40. Okay, 101.40. That is our radar lock. Nothing to worry about yet. And the second warning level should then be about here, which is, let's see here, about 92,250, 99,250, 99, make it 245. All right, we'll give it a little bit of leeway there. And the rest remains the same. That's what I'm looking for. Warning levels for the bulls. And if we do break higher above 106, as I showed you, we're going to 113. And then the ideal wave 3 target zone is anywhere between equal to 1 to about 1 to 1.236 times 1. Pullback for wave 4, I would say probably to about here. I don't think it's going to pull something like this. This should then be wave 4, and then a wave 5 to about 125,000. Okay, I don't give it much more credit than that, to be determined, of course. We still broke out from this potential bull flag pattern. Everything is always a potential until proven correct. Still above the rising 10, the rising 20, the rising 50, the rising 200-day. The Ichimoku cloud is rising in green. So the trend is 100% bullish. We must give credit to that. So the trend remains bullish regardless of this 8 times selling at 106,000. So clearly this trend line, well, it's not really a trend line, it's just horizontal resistance, needs to be broken. And this trend line here, the very short-term trend line, needs to hold. Moving on to Ethereum, also here we are in this downtrend, right? We are below this trend line. It of course formed here in early January, because you need 2 lines to make a trend line. And then we bumped into it several more times here in the middle of January. And yesterday as well, or actually today, it's already moving to, of course, Saturday in GMT, London time. So still resistance. We're below the Ichimoku cloud, below the 20, the 50, and still above the 200-day. So the trend here is not happy. That's what it really is. So we have the warning levels here at 3,328, 3,178, 3,125, and ultimately 2,910. I don't want to see it go below 2,910, and this is either morphing into a double zigzag or something a lot more bearish. I can count 5 waves up since the August low into the December high. It's a very marginal higher 5th wave of this potential first wave. So we have to take a little bit grain of salt, but it works. Okay, it does work. And second waves can be quite deep, of course. This can go all the way back here to 2,600 into this congestion zone in September, October. Remember, we're not too bullish about it until we broke above 2,700. And that's what we've done. So that's when we turned bullish. Okay, and now, yeah, it just doesn't look too great yet. Long-term trend line, as you can see, we're petering right at it. Okay, this is this long-term trend line since the top here in 2016, and a secondary top here as well. So these are similar trend lines. As you can see, it's a little arbitrary. It's more arbitrary than the one I was going to show you for Riot, but we're still in a long-term uptrend. Okay, that's the message here. We can step below it as we did here in 2019 and 20. And then it has to resurrect itself into a new uptrend. Also here, the 200-day moving average shows you if the longer-term trend is up or down. And currently, we're still up because we're still above it, right? The 200-day here is about 29.84. All right, move on to Riot. I've shared this chart with you earlier this week, and we now have 1, 2, 3, 4, 5, 6, 7, 8, 9 stabs at the trend line. And every single time it gets sold off. Unfortunately, nobody's told me why this happens. What is the reason behind folks selling at the trend line? Is it some self-fulfilling prophecy? It's not algorithms, because algorithms have not been around that long, and these trend lines already existed way before there was computer trading. So it's just interesting to me what makes a market tick to trend lines. Anyways, hopefully the selling will be over soon. We still have the potential here for this bullish wave count, the 1-2 setup as shown, 1-2, 1-2. But we do need, of course, that breakout above the trend line. That's really required. The weekly chart did see a marginally higher close above the Ichimoku cloud, and that's the first time since pretty much the beginning of last year, 2024. So that's a constructive sign. Everything is still pointing up. We're above the 10-week, we're above the 20-week and the 50-week simple moving average, below the 200-week moving average. So that we need to clear as well. So if we can get above that trend line, clear the 200-day moving average, or 200-week moving average, we're good. Again, we're holding the 10-week, the 50 and the 20-week, and now the 20-week is also above the 50. So this is soon turning into a pretty good-looking chart. We just need a little more patience to see this fill in, and this is still our preferred wave count. On the shorter term, again, you see this 1-2 setup here, 1-2 right there. just a different labeling of the twos, and then a 1-2-1-2 potential. If not, then this is a ABC higher, okay? And that is just, yeah, the way it is. I could make this into a leading diagonal, 1, 2, 3, 4, 5. And that is why I really want to see a daily close above this trend line. It looked so good today. It looked so good yesterday. I mean, look at this selling here. Ridiculous. So regardless of all this nastiness over the last 3-4 days, especially this week, Monday, Tuesday, Wednesday, Thursday, Friday, seems to be a lot of selling. We're still moved higher for the week, and we're still above the warning levels 13, 12.7, 12, and 11. So that's constructive. We're above the Ichimoku cloud, we're above the 10, the 20, and the 50 simple moving average, as well as the 200-day. So this is soon turning into a 100% bullish chart, and that must be respected. The only thing left for the bulls to do is break above the downtrend line. Not intraday, not like we saw here or even yesterday, but on a daily closing basis. Expect then probably like a fake breakout, a retest, and then moving higher. That is the normal procedure, to be determined if that's going to be the case. Onto the ETFs. BITO still looks good. It just looks like a more 4-day consolidation after a decent run-up. Nothing out of the ordinary. We're not below any warning level, so I cannot say with any confidence that some sort of top is in place. If anything, most likely not, because we're still below this green wave 3 top made in December. Okay? Yes, this green wave 4 can always become more protracted, right? Then this was A of 4, B of 4, and then C of 4. That's always the case. The warning levels will tell us if that is the case or not. For now, we do not prefer it, but we keep an open mind and we remain flexible, and we are sticking to our warning levels at 25, 24.5, 23.2, and 21.6 to tell us that, no, this is not the wave 5 to 27, 29, potentially 29, 32. It is indeed a B wave of a larger fourth wave. For now, I have zero signs that the top is in place. And here we have IBIT. Similarly, we're still above even the first warning level at about 58.5. The second warning is about 55.25, 54, and then 51. And as long as we hold above these warning levels, we expect 65.68, potentially 68.71. ETHE, well, of course, since it tracks Ethereum, is below the same downtrend line that's been in place since December. And you can clearly see we need to clear it. Right? You can clearly see we need to clear it. I like to use the word clear. And we're below simple moving averages. So this chart just doesn't look too happy just yet. So this wave 2 can, even though the rally for 4 days here looked pretty good, it can become more protracted and still go all the way down to the low 20s, high 19s. I have zero indication that the top is in place. The technical indicators are really starting to turn back up. That's all good. That's all nice. That's all dandy. But I want to see, of course, improvement in price. Price is the final arbiter. And if we don't see that improvement in price, then it's just not going to happen. Okay. So with that in mind, still below downtrends, above 106,000 on a daily closing basis, targets 114,000 at a minimum, most likely 126,500 at the most, I would say. And I must adjust this target zone here, there. So that is then right there, right there. Okay, again, you can see how this orange wave 5 would target picture perfect into this ideal target zone for wave 5 of 3. And then we'll see one of the largest corrections for Bitcoin since the bull run started in 2022. Expect a 50 to 62% haircut. All right. Now I'm trying to get that published on Seeking Alpha, but somehow they think that it's not important for long-term investing. If a 50 to 62% haircut is not important for long-term investing, I don't know what is. Even if you're in it for a decade, it's pretty good to have a strategy in place on how I'm going to deal with that one. I'm just going to close my eyes. Maybe I'm going to hedge. Whatever you want to do. Such large corrections need to be dealt with. Anyways, rant over. Have a wonderful weekend. Again, nothing bearish to see here. yet. I don't see it. The charts just don't have it. Still looks like 100% strong uptrend to me, just very overlapping messy, which is a ending diagonal pattern for Bitcoin. And, Ethereum needs to make up its mind what it wants to do, and that is break above the trend line, get above the 50-day Ichimoku cloud, weekly close above 4,000, and then 7,000 is next. Take care, trade safe, and I'll see you all later next week.